floor to John.
Thank you, Brian. And ladies and gentlemen, thank you for making the time to let us present to you this morning. And we appreciate the opportunity that specialist financial advisors have given us. So I have a series of 11 slides to show you this morning. And the first slide, just to establish our credentials, is that we are, like specialist financial advisors, we're specialists in the retirement village sector. We've been doing this for 20 years now, and we've invested in over 20 villages throughout New Zealand. So we only focus on the retirement village sector, and we have provided a very good return for our 2,500 investors over that period, showing in the last 4 years a steady 8% per annum dividend. But today I want to give you some background, a very broad view of the Auckland residential property market, and then specifically talk to you about an opportunity that we have introduced through specialist financial advisors to an expanding village in Ori, or up here just north of Auckland. So, just if I press this one, Brian, you...
That's right, just...
Oh, look at that. New Zealanders have a love affair with residential property. In New Zealand, the value in 2017 of investments in residential property was $1.05 trillion. In commercial property, 200 billion. In New Zealand listed stocks, not much more than 10% of the value of residential property, and super funds even less than that. So New Zealanders for many, many years have prospered through residential property, and they've put a huge, our economy is hugely distorted because of this. And really, if you look at the fundamentals of why this is, firstly, New Zealanders came to New Zealand as migrants to acquire land. That was why the white man came to this country, because in Europe and Scotland and England, and Ireland, where most of them came from, they were excluded from landowning. So right from the early days of this country, owning your own land was a core value for Kiwis. And then as we went on post the Second World War, we had a long period in New Zealand of inflation. At one stage, my personal residential mortgage was costing me 15% per annum. That was the interest rate on a first mortgage. But my house was growing at a rate of 20+% per annum. So it encouraged New Zealanders to invest in residential property and mortgage themselves up. And the difference between the value of the property and the cost of the interest was always positive. So New Zealanders accumulated residential property wealth through what we called in those days farming inflation. We just rode the inflationary wave of residential property in this country. Now that has changed to a degree, but that fundamental psyche is embedded in the minds of Kiwis of my generation and up. My father owns a property on the northern slopes of Remuera that he acquired 30 years ago. And some years he makes more money tax-free out of that residential property than I do in running the business I've just talked to you about. And all he has to do is sit there and let property values take care. And he gets that as a tax-free benefit. So that means New Zealanders, through their love of residential property and their deep distrust and fear about the New Zealand Stock Exchange, because a lot of them in 1987 lost a huge amount of their wealth in New Zealand Stock Exchange, and they still haven't forgotten that experience. So that is why the fundamental driver of demand is here in New Zealand. And it's going to take many, many years to restructure the minds of New Zealanders. So if you look at the New Zealand property market, I'll just go one more from there. If you look at the movement in the New Zealand property values, this is over a 12-year period from 2005 through to 2017. You can't quite see it here, but that's the zero line there, about there, okay? Only once in that period, that 12-year period, has the market moved down to a drop in values, okay? And that was at the peak of the world financial collapse. So in the year 2009, there was just over an 8% decline in property values in New Zealand. Now, you compare that to, say, the United States, where you remember in 2009, they used to have a thing called jingle mail, because people would send the keys to their houses back to the mortgagee because they dropped so much in value that they were underwater. Never in New Zealand history has there been a mass decline in property values, or the banks making mass foreclosures on property. So the market, the residential property market, is very stable. And of course, you read in the newspapers when they talk about the Auckland market being dead. You know, those are headlines designed to sell those newspapers. They're not actually in touch with the reality of the situation. And in a few minutes, I'm going to talk to you about what the current market in Auckland is about, using quotable value. So fundamentally, the other thing is that because of inefficiencies in the building industry in this country, particularly around the Resource Management Act, we have a legislation in this country that is designed to protect the environment, and that is important. But what it means is that local councils take a very, very long time to approve a new house being built. You know, it can be anything up to 18 months. That means that we are continually, particularly in Auckland, where there's about 30,000 dwellings needed per annum, we're continually facing a housing shortage because they cannot build sufficient houses quickly enough to cater for the growth in the population. So this effectively, the housing market in New Zealand is in a state of crisis because demand is exceeding supply, and the prices are being forced up because of that. And you know, the government is announcing it's going to build 100,000 new homes over 5 years, a 5 or a 10-year period. You know, that will make some difference, but it's going to take a long time for that to cure itself. So in the meantime, we're going to see a continuation of the trends that I showed you before. So I talk about a housing crisis, and I believe in your country, and there's a saying, a crisis is a dangerous opportunity, and there is opportunities within the housing market. And I want to talk to you now specifically about the opportunity in the retirement village industry. The retirement village industry in New Zealand is very well organised. There is no turmoil, no scandal. The listed retirement village operators, amongst the most well-regarded public listed companies in New Zealand. The legislation and the economic model works and has done so for many, many years. From an investor's point of view like mine, it is very attractive because it provides long-term steady cash flows backed by residential mortgages. The key, though, that I want to talk to you today is that it is meeting a strong domestic demand. Because if you look at people like my father, who's now into his 80s, my father has a house that is worth many, many millions of dollars, but he has no savings. So what they are is what we call in this country asset rich and income poor. They've got very little, because they have been attuned to borrowing and investing in real estate, they don't have a lot of income proportionate to their assets. So what we're finding now is that a lot of people, senior New Zealanders, 70 years and plus, are downsizing their houses. They're selling those big bungalows that you see on the North Shore and in the eastern suburbs of Auckland. That generates them millions of dollars of cash. They spend maybe 50% or less of that on a retirement village dwelling, and the rest they can convert into savings that generate income through people like Brian. So that is a fundamental change that is starting to occur in New Zealand. And the retirement village sector, because the big companies are well organised and the councils like retirement villages in their community, we can push those retirement villages through and build large-scale dwellings relatively quickly compared to people who are developing land subdivisions. So what we're doing the other thing is that the number of New Zealanders entering retirement is increasing dramatically. After the Second World War, there was a baby boom in New Zealand as returning soldiers joyfully reunited with their families. And to double over the next 30 years. So you can see in the key target market, 75 plus, the population of retirees is increasing dramatically. And this means that we need at least 11 new retirement villages a year, big scale retirement villages, to cater for that demand, that organic domestic demand. So what we're doing is, this is a village called the Grove up in Orewa. Orewa, where are we? Here's the motorway, and we're just about here right now. Okay, so Orewa is a destination retirement village area. These are some of the villages, and what it does is there's a lot of wealth tied up in residential property down on the North Shore, and a lot of people are doing what I described before, selling properties on the North Shore for $2 million plus and moving up into this beachside suburb, because Kiwis like to be beside the seaside. So plus they've got the attraction that there's the motorway. Off peak, they can get down to the CBD or to see their relatives in under 40 minutes. So it's away from Auckland, but it's close to Auckland, and it provides a seaside environment. So we've gone up there, and this right here is an expanding village that we've acquired, and we're investing in that. The construction has started on the first 67 apartments, and eventually it'll be 103 apartments. And as you can see, it's close to the beach, but it's also close to the shopping centres here. That's a flat walk of about 500 metres. So it has a lot of attractions, and at the moment we're selling off the plan one apartment a week. So we've had very strong support from the local market. So this is what it'll look like when it's finished. The average selling price will be around $800,000. So for people who are selling in the North Shore, that means they've got lots of money over for investment. But for $800,000, we can build them a very luxurious boutique retirement village that has got a lot of benefits and points of difference to the big retirement villages like you might have seen at Maygrove or else the Ryman retirement villages. Has anybody got any questions at this stage?
So how many square meters per unit?
Yeah, the top ones on the top floor are 3-bedroom apartments, and they're about 120 square metres, the biggest.
Okay.
Yeah, and then they go down to the smaller studio ones, which are about 85 square metres.
Okay.
That's the range, because we're trying to provide something for everybody. Yeah.
John, I did see in your last slide you mentioned something about the percentage of retirees
Yep.
in the local area. I think that's,
Yeah, because Orewa is already recognised as a retirement destination. It's got a very high proportion of 65 plus people, about 20%, as opposed to the national average of 13%. So what we will find is that most of the people who buy at the Grove will either come from the north of the North Shore or will be living in Orewa now and are wanting to make the next step. Because Orewa prices have escalated quite dramatically over the last 2 or 3 years themselves. So there will be people in the local area who will want to buy it at the Grove to unlock equity in their house because they're sick of mowing the lawns and etc. Yeah. So that's the interior, and as I said before, it's got a selling price of $800K, and it's specifically designed to be upmarket. And the big listed retirement village operators build a product that is it's good quality, but it's very it's like going to McDonald's rather than going to a good restaurant. You know, it's designed for the mass market. Yeah. Yeah. So that's the overview of what we're trying to do, and we are confident. For around the election, there was a lot of news talk in the newspapers about the property market being dead. So we launched this in November of this year, just after the election, and it took a wee while to build up. But as I said, since Christmas, we've had 5 sales. That's nearly 1 a week, and it reinforces what's happening in the market. There is a government organisation called Quotable Value, and they put out the statistics for the residential property markets in New Zealand. And they're saying that in the Auckland market has grown in value by 1.6% in the last 3 months. So in 3 months, it's grown 1.6%. If you annualise that, that would be 6.4 or 6.2%. Yeah, yeah. So what they're saying is that now that, because Kiwis, in this country it's crazy. At Christmas time everything stops, you know, and everybody goes to the beach for 3 weeks. So that means between the election and up to Christmas, it's chaos, and it's very hard to get anything done. And then everybody goes to the beach for another 2 or 3 weeks afterwards, and it's not until you get into late January, February, that things really start to kick off. And this is what we're seeing now. We're seeing the market starting to really surge back and continue, in real terms, the performance it had prior to the election in 2017. A lot of the uncertainty around the government has gone away, and the fundamentals remain the same. The demand is there. So really, that's what I've got to say. Has anybody got any questions about the market? Or
is this free title or license to occupy?
Yeah, license to occupy. Yeah.
Okay. License to occupy.
Yeah, yeah,
Okay.
yeah.
So it means this we're selling them after 30 years we can buy back.
Yeah,
Okay.
yeah, yeah. I didn't quite catch that last bit.
No, this unit is a free title or license to occupy.
It's licensed to occupy.
Okay.
Yeah, yeah, yeah. Which is the traditional retirement village model.
Yes.
Yeah, yeah.
Perhaps, John, you can just very briefly explain the traditional retirement village model.
Okay, all right. So because we talked before about how senior New Zealanders are asset rich and cash poor. So the people who pioneered the retirement village industry in New Zealand were aware of this. So what they did was they say, okay, we can't expect these people to borrow money because they've got no significant income. We can't expect them to rent our dwelling office because again they've got no income. How do we provide them good quality housing without them needing to borrow money? And how how do we deliver a product that is same quality as their existing house, but costs them less than their existing house? And fundamentally, what they came up with is what you've talked about, a license to occupy. Whereas a person like my father can go into that village and he can occupy in exchange for paying cash at about 80 to 90% of what he would pay normally. In other words, he's getting something like a 10 to 20% discount on what he would pay in the market. He gets a license to occupy. But what he's doing is effectively, when he gives up any rights to capital gain, and over time the money he paid to occupy that property is eroded. So he is effectively paying for his occupancy by instalments, and that's an economic model that's applicable in about 90% of the retirement villages in New Zealand. All the public listeds use it, and it is a very good model, because what it means for the retirement village operator, he gets to build his village at a break-even price, but over time, as these people depart, he gets a stream of money that turns over time into a river of money as people keep moving out of the villages and new people keep coming in. So it is a very, that's what I talk about back here. Long-term, sound economic model, long-term cash flows. That is why the listed company, retirement village companies in New Zealand, all sell at a premium because of those factors there. All right, Brian, do we want to talk about the opportunity at the Grove specifically, or?
Yeah.
May I ask?
Yep.
Sure.
Yeah.
Questions?
I'm a little bit slower, very slower to follow you. For my understanding, you are talking about a specific project
Correct.
like this.
Yeah.
Now, you encourage the investment to this project.
Yeah.
Is it right?
That's right.
So, who is the main investor for this project?
Senior Trust Capital is
Senior Trust.
the company I work for. This one here. Yeah. We have put up most of the equity, but we need to do other things as well. So we want to sell down part of our participation. So currently we've provided about 60% of the funding for that.
Already got 60%.
Yeah, yeah.
60%. So
yeah.
you want the remaining one, you want encourage
Yeah.
them from the society.
Exactly. Yeah. We want to drop our holding down to about 40%. Yeah. Because we need to seize other opportunities.
So that is totally the how to say, the enterprises, not the government one. What
Yeah.
you are doing.
Yeah, private enterprise. Yeah. Is it? Yeah.
I'll do an explanation.
Yeah. You go.
大家还有没有其他的问题关于这个？
And how long for this project you think it will take?
It's going to be in stages. The first 67 will be 3 years, and then to get to 103, it will be about 5 years.
So
Yeah.
totally, if you invest it and the return will be last like more than 5 years.
No. There's you can come in for 3 years, and then if you want, you can reinvest or continue out to 5 years. But the minimum is 3 years.
Minimum.
大家关于这个奥克兰房地产市场，还有这个养老院的这个房地产层面有没有其他的问题？如果有的话，大家可以现在问。至于这个具体的项目，一会儿我跟大家总结一下。
倒不是关系，对不起哈，不是很关注这个项目，因为不知道，没听说过。想了解的是关于养老院市场的情况。
刚才您看还有什么问题，你可以现在问。
他的问题非常简单嘛，他就是问你这个到底花多少钱，我们投资多长时间，人家是问这个问题是不是？
对就是
对
我现在我都不知道他今天来是做什么。刚才
没有
他讲了以后，
他刚才
我才在那儿想，他是
我们讲
讲个项目，讲个项目，让你来投他这个项目。
啊，对
我以为是今天是讲养老院的情况。
对，他的想法人家是已经跳到你们的前头去了，对不对？
大家关于养老院市场还有没有其他问题？要是没有的话，我总结一下我们这个。
我觉得挺好的哈。
确实好，确实好。
Alright, John, what I'll do is can I just swap you?
Yeah, sure.
Sum them up.
Thank you, right. Thank you, folks. Appreciate you hearing.
我给大家总结一下哈，就是咱们刚才讲的这个是怎么回事呢？就是今天就是 John 还有他们 Senior Trust 他们的职业就是做这个层面的，他每天的工作就是选地点儿，研究这个地区一共有多少就是65岁以上的居民，然后已有的养老院的供应量是多少，就是房地产市场的工作嘛，他们每天是处理这个工作。所以今天 John 来给大家讲呢，这就是整个这个 presentation 里边包括就是咱们现在就是年初咱们整个。就之前首先再看了一下之前的这40年以内，咱们新西兰的整个的房地产市场的这个情况，再看了一下去年的这个咱们房地产市场，就比较起来，在整个新西兰的投资市场，包括房地产市场，包括商业房市场，包括市场的股票市场的交易额的情况，大家可以比较起来这个量数的。再讲了一下，就是说，在这个就是说咱们新西兰人对房地产市场的热衷的前提下，就是咱们这个养老院市场的层面是具体是怎么情况，然后呢回到了就是说现在呢就是他们就是 Senior Trust 主要的资金的出口就是现在在 Oriva 这个项目，讲了一下这个。
已经开始了这个项目。
这个项目已经开始了。
已经在建了。
已经在建了。所以说您刚才的问题就是说关于这个项目，就是您应该是说我不知道这个会是讲什么的，我刚才总结一下，咱们这个会主要是那些信息在哪，回去看彩页的时候这些信息都在这里哈，然后我们那个小教室也会给大家总结一些就是文字上面的今天讲的信息的交流，这个视频呢我们也会发到那个群里边。然后
第一阶段已经开始了，他刚才说分几个 stage。
已经开始了。这个项目是去年11月份的时候，就是我们的这个整个的就资金量已经到位，都已经开始建筑了，所以说现在就是
去年11月份开始的。
开始了，对，所以现在已经在进行当中。我如果就是说提一下，就是我们这次投资的这个情况是怎么样，就是说他们要盖这个项目，然后他们资金呢的渠道，一个是自己的股东资金，一个是这个银行的借款资金，一个是他们 Senior Trust 一个是上市的基金可以集资的资金，这3个面儿，然后他这3个面儿把这个项目总共的资金缺口已经不需要钱了。然后呢，我们公司是干什么呢？我们是给客户处理理财的，所以说我们公司里边有很多客户平时需要现金收入，就是说有年轻一点的客户呢需要升值，就是这个钱越滚越大。岁数稍微大一点或者是没有工作的客户，把这个本金拿给我们了以后，他每个月他要现金要生活用嘛，所以说我们一直要处理解决客户这个生活花销这个问题。所以我们在市场里边一直想捕捉一个就是风险又可以可控，但是现金收入高的项目，就找到这个项目了。筛完这个新西兰这个整个这个养老院市场了以后，我们找到跟他们合作这个项目，所以他们已经填进去的这个资金端口里边，我们要了一个份额出来，就我们组了一个单位，就是跟他们要了个份额，这个份额呢一共的这个份额的这个口呢是1600万，到现在为止呢，我们就是说预计资金呢已经进去600多万了。所以说这个缺口就是我们给客户提供的投资的机会，这个投资的1年利息是10%，最少的投资额是25万，然后每月发利息，周期3年，都写在合同里边的。
这么